We have with us today Mr. Ajay Piramal, Chairman of Piramal Enterprises. Mr. Piramal, thank you for joining us on Bloomberg Quint. To begin with, you did an acquisition of $171 million. Where does this acquisition fit in your entire healthcare segment?
So our focus in the after we sold our domestic formulations business in 2010, we have been growing the rest of our pharmaceutical business organically mainly. And if I look at it in the last 5 years, our CAGR in the pharmaceutical business has been 17%. In the last 2 years, we've made 7 different acquisitions across the range of pharma. And these have been in products which are in the critical care space, in products in the OTC space in India, as well as in pharma solutions. This latest acquisition of ours is a product which is used for extreme pain in spasticity. And it is a unique product, though it is a branded generic product, that it doesn't have any competition in the type of product that we have. And this product adds both to the top line as well as to the EBITDA of our company. We are growing. Our strategy has been to increase the number of products that we have, as well as to go up the value chain, and thus all of these acquisitions are in that space.
And you've been concentrating on critical care, especially for overseas market, Janssen, now Mallinckrodt. Is that the area which you're looking at when you're looking at growing outside India?
No, the areas that we are overall looking at is to go up the value chain. So Janssen acquisitions that we did, as well as this from Mallinckrodt, is in that direction. But also 2 other acquisitions which we did really in the pharma solutions space is also in that. We did a few months ago an acquisition in the high potency API space. Yes. Again, that is a very high growth area. It's a niche area where the margins are higher. Similarly, we did something in the injectable space, in the sterile space, again in the US. So it's in both in all the areas. We've done that in the OTC space in India as well. Again, these are products which will add to our top line as well as to the bottom line.
You're going to pay $32 million over the next 3 years, and these are dependent on milestones, and you already paid $171 million. Being means a shrewd businessman in terms of investing in capital, are these acquisitions going to give you what 21-22% return on investment, which you normally say that every investment should try to get that kind of returns going forward for the shareholders?
So I think these will this acquisition will meet our the hurdle rates that we have for the acquisition that we have done. Yes, because these are good margin accretive acquisitions, and we believe that we can also increase the top line in these.
When you look at the entire healthcare space, and you've mentioned about to your shareholders that at some point of time you're going to do a restructuring of your business, wherein you get more value for healthcare, financial services, and information and data businesses. When that happens towards the middle of this year, will the healthcare business be good enough to compete with its peers? You were trying to build a good base for the healthcare?
So first, let me just clarify that we will separate these businesses. It won't happen in mid this year, but it will happen in the mid-term. I said in the sense that it is in the next few years it's going to happen. Okay. So let me say that's the first thing. And we will make a differentiated business which should be able to stand on its own in the pharma space.
When you say mid-term, what is it? Means couple of years. Is it going to be one at a time, or are you going to have a one restructuring which will bifurcate the company into 3 different strategic companies?
So we are still not yet. We have not yet come up with the time frame for this. But yeah, there will be clearly a company which will be pharmaceuticals, and there will be a company which will be financial services.
And you have good investment in Shriram as well, so it will. You
So
have to handle that.
the Shriram is a natural fit with the financial services space.
So when that happens, you look at merging both of them and going.
So that's not something that we've yet decided.
You know, you have a pulse on the ground, and we had demonetization right now, and you were saying that it's not as bad as people are talking about. Give us a sense of what has been your feedback with respect, because you handle real estate, financial services, and real estate loans, which is on the wholesale side actually.
So when I look at demonetization, it's not had as bad as an impact as is sometimes made out to be or people believe. So let's look at the real estate space, which where we are one of the where we lend a fair amount of money. I think as far as I see from the people whom we've lent to, and we've lent to several, and we studied more than 300 such specific proposals that we've lent to. It's about 75% of the sales in the last quarter where demonetization was compared to a normal quarter. But I don't think that this is a sales that will be lost. This is just delayed, because as you know, in real estate particularly, it's not a decision is made on the spot. It's a decision which people take time to, and when every day if we read that prices are going to come down, you'd rather wait and see what happens in the next few months. So that's where it is. But when I talk to some of the good builders, they seem to be pretty confident that things will come back to normal. Also, frankly, on the real estate, if you find that interest rates come down, then housing loans actually go up. When I looked at the OTC space, where we are dealing with consumers, I think the sales were affected to about 10% from what would have normally expected, though ours have grown in the last quarter. Our growth is also because we've done a lot of investment in both in increasing our distribution sales as well as through some acquisitions. But generally, I would say compared to what we had hoped for, it's about 10% lower. But now things are becoming back to normal.
Finally, I'm running out of time. In the presentation which you made, you had an aggressive interest rate target. In this, you said that you expect interest rates to fall drastically in the next 1 year or one or 2 years, and that's what is going to spur housing consumption, and you're also getting into the housing finance market for consumers there, because you see a lot of opportunity coming there. What's your view on there?
So I'm hoping that interest rates will come down, because there is I think we need to spur credit growth. As you know, the offtake of credit from the banking system has been pretty poor in the last year, and it's now time for interest rates to be lowered. I think that will give a good boost to the economy, and I hope that happens.
And on the housing finance business?
Similarly, and therefore that will affect all our businesses. And housing finance, actually demand goes up a lot when interest rates come down. So I'm hopeful that that will happen.
Mr. Piramal, thank you very much for joining us. Thank you.